morning. Good morning, students. So we are doing this final accounts. In this final accounts, we discussed how to prepare the trading account, how to prepare the P&L statement and the balance sheet with adjustments. There are few more adjustments that we have to discuss. We'll discuss that first. Right. I'll do one question. Most of you were asking about the provision for doubtful debts and all these things, right? So I will do this question so that you have a clarity on how a provision for doubtful debts or a provision for discount on debtors, how these two accounts are mostly taken care, and then you'll have more clarity of how it should be prepared when we are preparing the final accounts, right? Let us look at this question once. So they have given you some balances, right? Few are debit balances, few are credit balances. They didn't tell you that all these are debit balances on the left side and all these are credit balances on the debit side. No, they didn't mention it as debit or credit balances. They just have randomly put all the accounts here, which means this can be an asset. The items this side can be an asset or liability. Items this side can be an asset or liability. So it's a mixed statement. It's not like a trial balance. If trial balance is given to you, you know that all the debit balances mostly are assets or expenses, and all the balances on the credit side are either liabilities or incomes. But here it is not like that. It is just a statement wherein all the accounts balances are put together, right? Okay, so we have different balances given here, some assets, liabilities, expenses, incomes, and all that. Along with this, some additional information is also given to you. Let us read this. So what is the first additional information? Purchases include sales return of 2575 and sales include purchase return of 11725, which means whatever purchases balance we have, 1,60,000, is including a sale return of 2575, which should not have actually happened, right? So this is an adjustment that we have to do. And sales, which means the sales balance. Where do we have sales balance? Here, yeah. Sales of this amount is including a purchase return, which should not be done, right? So these two adjustment entries have to be first posted. This is one thing. Next, goods withdrawn by Mr. XYZ for own consumption. These are drawings for which these are included in purchases. For this, you will have to post one entry. Then wages paid in the month of April for installation of plant and machinery amounting to 450 were included in the wages accounts. So this is for the installation of plant and machinery, which means it should be added to the cost of plant and machinery and not wages. But they have taken it to wages account. So that adjustment also have to be done. And then free samples distributed for publicity costing 825. For this also an adjustment entry have to be done because this is like an advertisement expenses that have to be treated. So this is like the additional information we have wherein they have done few mistakes or they have included few things which we will have to rectify. Later, what is given? You will have to create a provision for doubtful debts of 5% and provision for discount on debtors 2.5%. Now, there are two things here. One is provision for doubtful debts and the other one is provision for discount on debtor. What are these two things? Provision for doubtful debts means we have already been discussing from last two classes, right? When you are not sure that a person is going to pay, a debtor, right? We have a debtor balance and that person may not be able to pay in future. You start creating a provision this year itself, right? We don't know the amount, so you start creating a provision based on a percentage on debtors. That is provision for doubtful debts. But what is this provision for discount on debtors? This is something different. I think one of the student was asking in the last class, provision for bad debts. Provision for bad debts or provision for doubtful debts will almost go as an interchangeable word. But provision for discount on debtors is a different word. Provision for discount on debtors means it is something that you are going to give him as a this discount allowed, right? What is discount allowed? It is given as a discount to the customers when they are purchasing goods. We will give them as a discount, and that part of discount is an expenditure for you. It is a discount allowed means it is an expenditure to you, not an income, right? So in future, you are assuming that if I have to do sales, I will have to give few products, as a discount to my customers. So when I'm expecting some discount to be given to my customers, or I will have to give some discount to my debtors. Debtors are not able to pay the amount. I will have to give them a discount. For that, if I start creating a provision, that will be provision for discount on debtors. It is not like they will be not paying. It is like I want to give them a discount, so I start creating a provision for it. So the difference between these two is doubtful debts is something which might become a bad debt in future, so you start creating a provision for it. But discount on debtors is something where you have to give. See, when you have a doubt, you have put it in the chat box. I am fine. I agree to it. But then I will have to reply also. I need some time, or at least I will take these questions in the end. Please don't repeatedly put the same question and then fill the chat box with the questions. This is my request. I keep requesting you. If you have questions, you have put that question. If I skipped it also, you can unmute in the end and ask me those questions. I'm fine with that. Okay. But if you're repeatedly putting those questions in between, it pops up and it disturbs my class also, right? And others queries which have to be actually taken up will be lost. So I request you to hold for some time. In the end, I will discuss. Right. Now, I hope you understood the difference between provision for doubtful debts and provision for discount on debtors. These two are different. And provision for bad debts, you can treat it as the same thing as this provision for doubtful debts. So now we are clear. Both are to be created in this question, and both have different percentages also given. One is 5% and the other one is 2.5%. Right? Next one, depreciation is to be provided on plant and machinery, which is 15% per annum, and on furniture, we have to provide 10% per annum. Both these are given to us, right? Now, bank overdraft, they are giving some information about bank overdraft. Bank overdraft is secured against hypothecation of stock, which means you have a closing stock. That closing stock is hypothecated. Hypothecated means what? We will hypothecate it with bank, saying that I will give this as a guarantee to you. I'm securing. I'm taking a bank overdraft. Why will a bank give me a bank overdraft, without even giving any security? So as a security, I am giving my closing stock as a hypothecation. So I'll tell them that this is the value of my closing stock, and this will be hypothecated with your bank. So I will need some amount, extra amount to be withdrawn. Bank overdraft means which is not there in your balance. You don't have balance in your bank, but still want to withdraw. So for that kind of a transaction, the bank will ask some security or hypothecation to be done, right? When people are taking loan, they hypothecate something or they give something as a security. So here we have given our stock as a hypothecation, correct? Now, bank overdraft outstanding as on 31st March 2022 has been considered as 80% of the real value of stock, deducting 20% as margin, which means whatever overdraft we have overdraft given here. So this is just 80% of the value of the stock is what they're saying. They have deducted 20% as a margin, right? And also after adjusting a marginal value of 80%, which means two times they have done an adjustment. One is the 80% of the value of stock and the 80% marginal value. Both adjustments have been done. So we will see how this will work when we are doing the trading account valuation. Now they're asking you to prepare trading account, P&L, and also the balance sheet, and also you will have to show the rectification entries, right? The rectification entries will be for these transactions because these have gone wrong. Few have gone wrong, so you will have to do the rectification entries for these, right? Okay. I'll write down the rectification entries first, then we will move to preparing the trading account and all those things, right? So the first one is what? First one is purchases include sales return and sales include purchase return. So you will have to first cancel the purchases or decrease the purchases by 2575. Agreed? You can reply in the chat box. If needed, I will unmute you. keep putting it in the chat box. Purchases have to be decreased by 2575. Agreed? Right? So purchases, yeah. So purchases account will be decreased by 2575. Now, this purchases account is debited or credited here. I will have to credit because purchase is an expense account. To decrease it, I will have to credit it. So I have done that. Now, what we will have to debit? What have to be debited? Debit goes to what? Yes or no? Return outward account. Outward or sales return, yes. Sales return or return outward account, correct. Not purchase return. It is not purchase return because clearly see the question. They told purchases with sales returns are included, not the purchase returns, correct? If purchase returns were included, then it is fine. No, that is correct only. But they have included sales return in this. So I have debited return outward account or the sales return account by 2575. Is this okay? Now the next one is what? Sales include purchase returns, correct? Sales are including purchase return, which should not be done. So sales have to come down. Sales have to come down means you will have to debit sales account. So I'm debiting sales account by how much? 151725. And this will go to return inward account or the purchase returns account, whatever you 1725. Right? So I've posted two entries here. One is the return outward account and the other one is return inward account because inward was not there in inward and outward was not there in outward. Both of them went to purchases and sales account separately. So both these we have corrected now. Done. What is the next rectification we will have to do? They told that goods withdrawn. This is goods withdrawn for own consumption is drawings which are included in purchases, right? So the third one will be drawings account debit to purchases account. And what is the amount? 3,500. Yes, 3,500. And the next one is about the wages, right? It was included in wages, but it should actually go to plant and machinery. If it is, it actually should go to plant and machinery, then plant and machinery account will be debited to wages account because wages has to come down and plant and machinery should increase, correct? So how much is the amount? 4. Right. And what is the next one? Free samples distributed for publicity costing 825, right? So this is a part of your advertising expense. So our advertising expenses have to be debited as an expenditure. And what will you credit here? What will you credit? These will be part of your purchases only, correct? You have some goods purchased in your account. Those only you can either distribute for free or you can distribute as a charity or you can distribute as an advertising promotion, whatever it is, it should come from purchases. So I have decreased purchases, right? Amount is 820. Done. So we have corrected all the entries. Entries have been corrected, but now if you look at these balances, suppose you see this, where is this plant and machinery? What is the value in plant and machinery? 19550. Is this value correct? Is this value correct? No, right? Because we have made a rectification entry, that balance have to be adjusted with this balance. So let us do that first because we made a rectification entry. I'm also writing the balances here so that we at least have a clarity when we are doing the trading and all these accounts. So plant and machinery ka balance was 19,550. Correct? And now, should you add or deduct will depend upon what is the journal entry that we have posted. What is the journal entry we posted? What is the journal entry we posted for plant and machinery here? The fourth one. If you see the fourth journal entry that we posted here, we have how much? Plant and machinery ka balance? 450. Should be added or reduced? It should be added or reduced to plant and machinery. Added 450. So what will be the plant and machinery value now? Yeah, calculate the value. Okay, 20,000. Fine. So the final balance of plant and machinery after rectification is 20,000. Correct? Done. Next one. We also have purchases account. What is the value of purchases? Let us go there. What is the value of purchases? 1,60,000, correct? 1,60,000 is the purchases. For this, you have done so many adjustments, so we have to do all of them. What are added, what are deducted? Let us see that. For the first entry, you will have to deduct 2,575. Yes? Okay. Next entry is what? The third one. The third one, drawings have to be also deducted. 3,500 also I'm deducting drawings. Then what else we have? We also have advertisement 825. This also we will have to deduct. So what is the balance? Check the balance in the purchases account. Only these three, I think. No? So we have one purchases, three entries also purchase, and fifth one is also purchase. Yeah. What is the balance in purchases account? I got two different answers. Just quickly check again. Is 153,100 correct or 153,500 correct? I got two answers in the chat box. All these are deducted, and then just tell me the balance. Okay. Then it is 153,100. Got it. Okay. Since most of you gave this answer, I'm taking this 153,100. Okay. Got it. Done. So purchases account is also done. What else we have? Written outward and written inward balances are also there. So do we have any written inward and outward given in this table? Do we have any written inward and outward balances given in this table? Let's quickly look at this table. Do we have written inward, written outward? No written inward, no written outward, which means whatever is the adjustment entry we posted, that will be the balance of written outward and written inward, right? So written outward, what is the balance? Written outward balance is 2,575, correct? And return inward balances. What is return inward ka balance? 1,725. This is the only balance we have. We don't have any other balance, so I'm taking that. And we have sales account also to be adjusted. What is the balance in sales here? 215,300, correct? 215,300. You will have to reduce it or add. Since we have debited sales account, it has to be reduced, right? So 1,725. What is the balance in the sales account? 213575. Is it right? 75 is the balance in the sales account. This is in the purchases account. Return outward, return inward, all are done. And what else we have? Outward, inward purchases, sales are done. Drawings is left. Plant and machinery is done. Wages is left, and advertisement is also left. Now wages. What is the balance in wages? 12,165. right? 12165 is the balance in wages. Okay. You will have to reduce or add 450 to it. You have to reduce or add 250 to it. Reduce. Okay. How much? 450 should be reduced. What is the balance? Final balance. One one seven one five. Is this right? Okay. Next we have advertisement. Advertisement expenses. What are the advertisement expenses in our table that is given? 3350, correct? 3350. And then what is the adjustment we made here? 825 have to be added. 825 add. So what is the final advertisement expenses? Calculate advertisement expenses final value. Okay, 4175. Done. Are we done? I think we have drawings left, no? Let us do drawings also. Drawings account. What are the actual drawings in the table that we have? Where are drawings? Here. Drawings we have here is 8,000, right? And what is the adjustment we have to do to drawings? 3,500. 3,500. So what is the final figure of drawings? 11,500. Okay, got it. Done. So whatever rectification entries we have made, we have done the balances. Return outward is done, purchase done, sales done, return inward done, drawings done, plant and machinery, wages, advertisement. All the accounts are done. And now we know what is the balance of different accounts where we have made adjustments. Correct? Rest all will remain same as per the table, but these figures, though, you will have to take it from here. This I have done this so that we have a clarity when we are doing the trading account and all these. It will be easier also to pick the values from here. That's why I have done that. Okay. Now let us move to the trading account. What are we going to start with in the trading account? Trading account has to be started with opening stock. How much is the opening stock? Opening stock, is it given in the question? Is it given in the question? Check for opening stock. Yeah, it is given here. Opening stock 32250. 32250. Okay. Next one is purchases. Yes. Purchases, you can't take the value from here. This purchases cannot be taken. What you will have to take, you'll have to take the purchases from here, whatever adjustments that we have done. What is the purchases value? 153,100. So you should take that. 153,100 minus purchase returns. What are purchase returns value? What is the purchase returns value? We have done, no? Here, return inward is 1725. 1725. Okay. Tell me the net figure. How much is it? 1375. Okay. Okay. What is the sales amount? Now sales, I can't pick it from here. I will have to pick it from where? From the calculation that we have done, because this had some adjustment rectification entry. This value have to be taken. So it is 213575. 213575. And what is the sales returns that we have here? 2575. Okay. So what is the final value? 211 Okay, done. So we have opening stock, purchases, purchase returns done, sales returns done. Now we will have to take closing stock. How much is the closing stock? For this, we will have to do a calculation. It is not given here. Only opening stock is given. Closing stock is not given in this table. For this, you will have to do a little calculation because they have mentioned about overdraft. You will have to pick the value from here, right? Now, what is the overdraft value? 80,000. And they told that that is 80% of the real value of stock, correct? Which means your closing stock will be 80,000, which is your overdraft, into 100 by 80. That is only 80% of the value is what he told already. So I'm trying to see what is the 100% of the value, right? When, 80% of the value is 80,000 means what is the value of 100% of the stock? It will be 1 lakh, correct? You just have to cross multiply and do it. Now, they also told that there is a marginal value of 80% that has been allowed as an overdraft, which means this is also not the closing stock value. On this, again, 100 by 80 have to be done to see what is the marginal cost that has been given to us. So calculate this. 1, it is the value of stock. 1, the marginal valuation that they have done for calculating the overdraft. So overdraft, what they did was, just calculate this final value and tell me. Final value. I got 2 different answers. Just quickly calculate and tell me what is the final answer. 120. Okay. Okay, fine. Yeah. 1,25,000. Now, what must have happened? I'll tell you what must have happened. Now, we had a closing stock value of 1,25,000. So, they told that I will only give you 80% overdraft on this closing stock. This is one thing. And then they told you that on this, we have a marginal value computation, which is again 80%. That's how you got an overdraft of 80,000. Okay. But we did a reverse calculation because we know 80,000. We did a reverse calculation to calculate what is the value of stock. Okay. Yes. Now, is it a gross profit or gross loss? Gross profit or gross loss? Okay, we didn't take wages. Okay. Wages. How much is wages? Wages, you can't take it from that table. You have to take it from here, no? So wages is 11715. Okay. 11715. Okay. Did we miss anything else? Okay, let us go back to the table only anyway. So overdraft, capital, drawings, purchases, opening stock, wages we have taken. These two will not come here. Debtors, creditors, bad debts, salaries, prepaid rent, range, carriage. Okay, carriage inward is also there. Okay. How much is carriage inward? 1125. Then you have sales. We have taken sales. Advertisement will not come here. Printing and stationery, cash in hand. Okay. Now calculate gross profit. Balancing figure. One 939535. Is that right? 139535. Is that correct? Just calculate. I got only 2-3 people answering this. Okay. This is right. I'm moving on to P&L statement, wherein you have to bring it here by gross profit 139535. Okay. Yes. Now let us start with the P&L statement. So plant and machinery will not come, furniture and fixtures will not come, bank overdraft, capital, drawings, purchases, nothing. All provisions will come. Yes, they will come. Debtors, creditors, bad debts. Okay, we'll start with salaries because that's the most prioritized thing. Salaries. How much is the salaries we have? Two. We don't have any adjustment for salary, so it is 2255 salaries. Okay. The next one is salaries payable. Okay. Now, when you have salaries and salaries payable, both of them, should you adjust the salaries payable in your P&L statement? That is the question. Should I write here, add outstanding salaries? Should I write this here? Yes or no? Should I write outstanding salaries here and adjust it? Should you do that? You are saying yes, you are saying no. It is actually no. Few people are saying yes, but it is actually no. It is why? Because this is the salaries payable, whatever we have, is directly coming from your, accounts. These are the balances that we already have in the accounts, right? So it is a liability which should go to your balance sheet. This will also be adjusted in your P&L statement here as part of your salaries, only if it is given as part of your adjustment. If it was given here below, that's there is an outstanding salary, then two types of adjustments have to be done. If it is not, only one adjustment, it will be directly going to liability. If it is included in this table, means already it is recorded in your books of accounts. Agreed? So no double adjustment will be done. If it is given here, means it is not recorded in your books of accounts, then you will have to adjust it. Since it is given here, it means it must have been already included in this salary. So we are not going to again add it. This will only shown as a liability. Same goes with prepaid rent also. You have rent and prepaid rent both given here in your kind of trial balance, right? It means this prepaid rent is already adjusted in your rent. You don't have to do it again. You just have to show this as an asset in your balance sheet only. Correct? So we have rent also. Rent is 4,300. Okay. Done. Then you have carriage outward. Carriage inward, we will take it in. Carriage outward, you will take it in P&L statement. Carriage inward, you will take it in trading account, right? This we already know, we have done also. 1350. And then what else we have? We have advertisement expense. Advertisement, I'm not picking it from there. I will have to pick it from here. What is the advertisement expense? 4175. Why I did not add outstanding salaries, I clearly told it is because it is not given as an adjustment. It is not an adjustment. It is already recorded in your books of accounts. When it is already recorded, means it is adjusted in your salaries. When something is there already in your trial balance, it means it is already adjusted in your books of accounts. So you don't have to redo the adjustment. If it is only given here as an additional information, then you will have to do the double adjustment. Right, advertisement is done. Anything else? Printing and stationery is also there. Printing and stationery is how much? 1250. Then you have cash in hand, cash at bank will not come. Office expense will come. Office expense is how much? 10160. Are you all there? Yes. Interest paid on loan. This is also an expense. Interest paid on loan. Just 3000. Correct? Anything else? I think only provisions we didn't write, because provisions I wanted to explain, I didn't write them. Anything else other than these? We have taken all of them. I hope we have taken all of them. Salaries, rent, advertisement, printing and stationery, carriage outward. Okay, office expense, interest on loan, everything is there. I think depreciation is one thing, and the provisions are one thing we will have to take. Otherwise, rest all we have taken out. Okay. Depreciation. How much is the depreciation? How much is the depreciation we have? What is the rates that are given? They told plant and machinery it is 15% and furniture and fixtures it is 10%. So what is the value of plant and machinery? Plant and machinery value, I am picking it from here, from the adjustments that we have done, which is how much? Where is this? 20,000. If you see, we have done the calculation here. 20,000 is the value. And depreciation is at the rate 15%. So what is the depreciation? 3,000. Okay. This is for plant and machinery. And let us also do it for furniture. Furniture value is how much? What is the value of furniture? It is 10,250. 10,250. And they told that depreciation is at the rate of, what is the depreciation rate for furniture and fixtures? They told it is 10% per annum. So it is 10%, which is right. Okay. So total depreciation is how much? 1025 plus 3,000, which is 4025. Depreciation is 4025. Since I don't have space, I'm not able to insert, I'm writing it here. It is 4025. Okay. Okay. Now the main part, which is the provision. I want you all to please listen carefully about this provision part. Provision is something everybody's haunting. So let us discuss this provision part. Now, I'm going back to the question. So what is the provision on doubtful debts that we already have in our trial balance? It is 3,200. Everybody can see that provision for doubtful debts that is already there in my balance sheet is 3,200. Yes? Keep responding, please. Yes, okay. Now, they are asking you to create a provision of 5%. This is also very clear. I'm not talking about discount and debtors. We'll first go with doubtful debts, then we will move to that. So they're asking you to create a provision of 5% on doubtful debts, right? Okay. Now, let me create this account. Yes, when you are creating this doubtful debts account, what is the balance you have? What is the balance you already have? Now I'll go back here. What is the balance you already have in your books of accounts? 3,200. Agreed, everyone? Okay. So I'm writing balance, which was already brought down 3,200. This is very clear because it is already there in the trial balance, means it is already existing in my books of account. Now, what should be the closing balance which I should carry it down to the next year? They told that they wanted to create how much provision. It is also clearly given here. They wanted to create a 5% provision. Yes. So 5% have to be calculated on what? 5% have to be calculated on what? On debtors, correct? Okay, okay, on sales. Why sales? Who is saying sales? On debtors, it has to be calculated on debtors. Hmm. How much is the value? 6,000. Okay. These two, everybody agree? Everybody agrees to these two. 3,000 where 3,200 where did I bring from? Since many were asking about this, I'm like going slow on this provision for doubtful debts account. You can ask me questions on this once I complete this. So this 3,200 I got it from my trial balance, which is the opening balance. And 6,000 where did I get from? It is on the debtors value. What is the value of debtors? 1,20,000. So 1,20,000 into the percentage that is given to you in the question. They told that we wanted to create a provision of 5%. So into 5% is 6,000. So this is also done. We have opening and closing balances. What else will be affected in this account? What else will be affected in this account? If you have any bad debts written off in that year, that also have to be adjusted. Do we have bad debts written off in this year? Do we have any bad debts written off in this year? I'll go back to the question here. Can you see any bad debts given in the question here in the table? How much is the bad debts that is given? 1,100. Did you all find it here? Bad debts is 1,100, which is given here. This is why I didn't take it in my P&L statement directly, because it has to be adjusted in my provision for doubtful debts. So I have a bad debt in that year which have to be written down, which is 1,100. Now, whatever is the balancing figure is nothing but the amount that will go to my P&L account as a provision that I'm going to create. What is the balancing figure? Calculate the balancing figure. 3,900. Is that right? Okay, most of you gave that 3,900. So clarity on this. This is the opening balance. This is the closing balance. Any bad debts written off will be also returned into your account, and the balancing figure will go to your P&L statement. That provision for this year is 3,900 that we have to create. Are we clear? I'm pausing for you all to respond. Any questions on this? Provision for doubtful debts. How much is the provision for doubtful debts? 3,900. I've written here provision for doubtful debts. Okay. Now we also have provision for discount on debtors. Let us also see that, right? discount on debtors account. Now, in this account, what is the opening balance? What is the opening balance in this account? Can anyone answer this? What is the opening balance in this account? Where you have to pick it from? Yes, it is clearly given here, 1375. So I will have to pick the provision for discount on debtors balance from here, 1375. So I'm going to take that. 1375, right. Now what will be the closing balance which should be carried down? It will be calculated. How will you calculate? They clearly told that it should be a provision of how much? 2.5%. Correct? 2.5% is what is our calculation that we have to do. Now, this 2.5% have to be applied on what? Is the question here. This 2.5% have to be applied on what? This has to be applied on your debtors for sure, but for debtors we had an adjustment. No, our debtors value was 1,20,000, correct? But we already had provision for doubtful debts of 6,000 closing balance. After this, what is the value of your debtors? 1,14,000. On this, 2.5% have to be applied, the closing value. Are we clear with this? What are we doing here? Because after debtors, you first have to take, if you have any provision for bad debts or doubtful debts. If nothing is there, then you will move to provision for discount on debtor. That has to come in that order. So on this 2.5%, what is the closing balance? What is the closing balance? I got two different answers. Just please check and confirm what is the closing balance. Is it 2850 or 2280? Because some people are saying 2280. 2850 only. Okay, 2850. So opening balance is given in the question in your trial balance ka, and closing balance I have calculated. How did I calculate? I've taken debtors, removed the closing balance of provision for doubtful debts, and on that I have applied 2.5%. This is okay. Correct. Now, what is the balancing figure? On which side you have a balancing figure? You have it on debit side or credit side? Tell me the balancing figure. Okay, 1475. This has to be my P&L statement, right? So this is something which is a balancing figure, which is the provision that I have created in the current year. Clear? 1475. Provision for discount on debtors. 1475. So we have taken all of them. Depreciation is taken, provisions are also taken. So whatever is the balancing figure is your net profit. Calculate the net profit. Now I hope everybody is clear with how provision for doubtful debts and how provision for discount on debtors are taken up. Right? Okay, we missed bad debts recovered. Right. You are right, Subhash. Where is that? Yes, bad debts recovered is something which you cannot take it to provision for doubtful debts account. You will have to show it directly in your P&L statement. This will be part of your asset. Something that is recovered means what? You got this as, previously you thought that person will not pay, but that person is paying means it is good, no? It is like an income to you or gain to you. So you show it under your credit side of your P&L statement, right? You are right. Now calculate the net profit. $83,800. Is that right? Net profit is 83,800. Is that right? I only got 2-3 answers, so I want others also to respond. 83, 800 net profit. Did you all get it? Okay. Okay, done. Great. Now we will move to the balance sheet. With that, we can close this question. The first item that we are going to take will be the capital account, correct? For capital account, you will have to do adjustments of net profit and also the drawings. Both have to be adjusted. So what is the capital balance that we have? Capital account balance that we have? 65,000, right? And what is the net profit? 83,800. And what are drawings? Drawings here are only 8,000, but we made an adjustment, rectification entry. So drawings have to be picked from here. What is the drawings? 11,500. Okay. 11,500. So what is the total capital? Is it 137,300 or 137,200? Two answers came in. 300 only. Okay. Done. Okay. What else have to be taken on the liability side? We have sundry creditors also on the liability side, and we also have bank overdraft. Both have to be taken, correct? Bank overdraft. How much is the bank overdraft? 80,000. Then we have sundry creditors of how much? 47,500. Correct? Anything else we have? I think we have outstanding salaries also, no? Salaries payable. Even this is a liability. Salaries payable. How much is the salaries payable? 2450. And let us come to the asset side. We have plant and machinery. Plant and machinery value was 20,000 minus depreciation of what was our depreciation? Plant and machinery ka depreciation was how much? 3,000. Okay. Finally, this will be 17,000. Next, we have furniture. Furniture values 10,250 minus depreciation of 1,025. How much is the value? 9,225. Okay. Okay. What is the next item? So plant and machinery is done. First item is done. Furniture and fixtures is done. Bank overdraft we have taken on liabilities. Capital also on liabilities. Drawings are done. Purchases in trading account it is done. Opening stock and wages are done in your trading account. Then we have taken provision for doubtful debts and discount on debtors and P&L statement that is done. Then we have sundry debtors. Okay. I'm taking debtors. 1,20,000. But so many adjustments have to be done no, for this debtors. First one will be provision for doubtful debts, which will be how much? Closing balance we will have to take, which is 6,000. Correct? And you also have provision for discount on debtors. How much is that? Closing balance? 2,850. Okay. So finally, how much is debtors? 11,150. Okay, got it. So I'm going in order so that we don't miss anything. Few people are texting few values, but fine. I'm just going in order. Sundry creditors we have taken in your liabilities. Bad debts we adjusted in P&L account. Bad debts recovered also in P&L account. Salaries in P&L. Salaries payable is outstanding, so we have taken in liabilities. Prepaid rent we have to take. Yeah. Prepaid rent of how much? 300. Okay, done. Rent we have taken in P&L. Inward is trading, outward is P&L. Sales in trading, advertisement, printing in trading account. Cash in hand, cash at bank are there. Office expenses, interest, both are done. So only cash in bank and cash at bank are there. Cash in hand is how much? 14503145. Anything else that we missed? Just quickly check the account and see if we missed anything. Closing stock. Yes, that also we have to take. How much is the closing stock? Closing stock. We have calculated, I think, no, in the trading account. How much is that? 1,25,000. Rest all we have taken, no? Assets are taken, liabilities are taken, debtors, cash, everything we have taken. Okay. Just tally and see if it is matching. It should match because we have taken all of them. We didn't miss anything. Just check. Two six 7250. 267250. Okay. 267250. Okay. Got it. Yeah. Done. It's matching. Good. Okay. Fine. Now, this question it had different kind of rectification entries and then preparing your trading P&L and balance sheet with different adjustments. I think almost all the adjustments are covered in this question. I just want you all to answer this. Okay, this is illustration 12. I want you all to try because all the balances are almost same, but I will discuss this provision part. Okay, I'll pick someone and ask because I wanted to know if you all are having that clarity on this provision. So look at the value. How much is the provision given in the trial balance? Can you all see what I'm showing? How much is the value of provision for bad debts in the trial balance? 30,000. Everybody can see that? Okay, good. This is one thing. Now I'll show you one more thing. Where is this? Yeah. What is this? They told provision for bad debts have to be maintained at 5% of sundry debtors. Okay. So this will be your closing balance. How will you calculate this? This will be calculated on your debtors value. Where is the debtors value? On 8,60,000. So that will be your closing value. And what will be your opening value? This will be your opening value. If you do the calculation, then you will know what will be the balance for the current year to be taken to P&L statement. Just calculate once. I want you all to do this because only then I will understand if you are having a clarity on provision for bad debts calculation. Just quickly calculate the value and tell me what should be taken to P&L statement. Do that account, whatever I have done. If you remember, in the Excel, I have done this one, provision for doubtful debt, opening balance, closing balance. We don't have bad debts. I hope we don't have bad debts. Okay, we have bad debts also. Bad debts are also there, 20,000. So take this also. You have opening balance, you have closing balance, you have bad debts. Now, whatever is the balancing figure will be your value to be taken to P&L statement. Calculate and tell me quickly this value. I'm waiting for your answers. How much should be taken to your balance sheet? So many different answers. I don't know why. Why everybody is not getting one single answer? There are so many different answers. Please, I want you all to try properly. I gave everything, so just have to put the numbers. That's it. What is the opening balance? What is the opening balance? Here, it is given in your trial balance, which is 30,000. So this will be 30,000. And what is the closing balance? They told it will be how much percentage? 5% on debtors. How much is my debtors? Debtors is 8,60,000, right? So this will be 8,60,000 into 5%. How much is this closing value? Tell me the closing value. Okay, 43,000. And we also have bad debts given in the question. How much is this question? How much is the bad debts? 20,000. Correct? So what is the balancing figure? Then why have everybody got different answers? Some people are saying 43, 53 and all. This, how much? 33,000, no? So how much will go to your P&L statement? 33,000. If this clarity is there, only then you understood provision for bad doubtful debts. Otherwise, you are missing something. Okay? Fine. Okay, most of you got 33,000, right? Rest of the question is almost the same. They gave you closing stock, they gave you some outstanding expenses, then they gave you the depreciation and all other expenses, and then few drawings kind information. You just have to prepare trading P&L and balance sheet. That I think you can try. Okay, try this question as a homework. I'm just giving you a 5-minute break, quick break, come back, and then we will do the manufacturing. Okay, we still have to do the manufacturing account, so that we'll continue with that. So come back fast after the break. Technical team. Technical team, we are taking a break, 5-minute break. Okay. Are you all back? Can we start? Okay. So this is the manufacturing account ka chapter. When we started this final accounts itself, I told you what is a manufacturing account and does apply to which kind of industries and all that. Introduction that I've given you, but how to prepare this manufacturing account? You know, when a trial balance is given to you, how to prepare manufacturing, trading, and then P&L and your balance sheet is what we are going to see in this question, right? So this question you will have to prepare all the four accounts. We are going to do all four accounts, right? With some adjustments that are given. So mostly the difference when you look at, here in the manufacturing account and other accounts are in manufacturing accounts, you'll have raw materials, you'll have labor cost involved. Okay. So you will have raw materials involved, you'll have labor cost involved, and you will also have WIP. What is this WIP? Work in progress, right? So some goods which are raw material will be converted into finished good. But if they are in between, they are called WIP, right? So you might have opening WIP and closing WIP also, right? Then you will have opening raw materials and closing raw materials all as well. And you will also have opening finished good and closing finished good. Now, when you're preparing a manufacturing account, this finished good part, whatever we have, will go to trading account. Because these are finished goods, this has to go to your trading account. And opening WIP and raw materials, both will be forming part of your manufacturing account. Because in manufacturing account, what are we trying to do is trying to see what are the raw materials we brought in, what is the process we have made. We must have incurred some direct expense, indirect expense for the manufacturing thing. So whatever expenses that you have incurred in that particular manufacturing, all those will be added, and then you will finally determine what is the cost of production. That cost of production is transferred to trading account to see how many finished goods we have in the beginning, how many we have in the end, and how many we sold. All this will be recorded in your trading account. In trading account, we will mostly not have any expenses other than the cost that is transferred from manufacturing. Rest all will be coming from your manufacturing account only, other than the finished goods, right? Let us see how we will have to do this. Now look at the question once. We have trial balance given here, right? Same like the trial balance we have seen before. Almost all the items will be same. What is the difference is we will have the raw materials part and all other part given in the question. Okay. Now you see they have given you opening stock. Opening stock of raw materials, work in progress, and finished goods. And we have debtors, carriage on purchases, bills receivable, wages, salaries, telephone, repairs, cash at bank, office furniture, repairs to plant. This is repairs to plant, right? This repairs to plant will go to again manufacturing account. You have purchases, you have plant and machinery, you have rent, lighting, general expenses on the debit side. And then credit side, you have creditors, bills payable, sale of scrap, commission, provision for doubtful debts, capital account, sales, overdraft. Almost all items are similar to you only, but few will not go to trading account, few will go to manufacturing account. That is the difference you will have to know. Okay. Now we also have closing balances given here, right? Closing balances of raw materials, finished goods, and semi-finished goods. Nothing but the WIP. That is also given to you in the question. What else is given? Salaries and wages. So they told that salaries and wages unpaid for March 22 are 902,000. This is nothing but outstanding outstanding salaries and outstanding wages. Okay. And they're giving you machine is to be depreciated by 10% and office furniture should be depreciated by 7.5%. Okay. Then provision for doubtful debts is to be maintained at 1% of sales. Okay. And then they also clearly told that office premises will occupy 1/4 of total area, which means what? Out of the total area, 1/4 is office means remaining 3/4 is for factory. That is what they're trying to mean, right? And lighting is to be charged as 2/3 to factory and 1/3 to office. They gave you clearly the breakup. When they say 2/3 to factory means this will go to manufacturing account, this will go to P&L statement. That is why they have given you that breakup. Okay, and same way office premises also. When office premises they're mentioning, they're talking about the rent because rent cannot completely go to P&L statement. 1/4 has to go to P&L statement. 3/4 will go to your manufacturing account because it is part of a factory, right? Now they're asking you to prepare manufacturing account, trading account, P&L and balance sheet, all of them as on 31st March 2022, right? Okay, we'll start doing it. Now, same way how we do our trading account and all those things, we will have to do this also in the same way, and we will same way start with opening stock and all. But here the stock will be what? What will be our opening stock? The raw materials and the WIP. That's the only difference we are going to have, right? Okay. Opening raw material, right? What is the opening raw material here? Are you all there with me? Are you all there with me? Okay. Opening raw material is how much? 21,000. Okay. Now, what are the purchases that we have done? What are the purchases that we have done? Look at the question. Purchases, do we have the purchases given? Yes, 85,000 if you can see. Okay, 85,000. And we also have closing raw material. How much is the closing raw material? It is given below. 16,200 if you can see, correct? Okay. 16,200. Now, this means what? Opening May, I had some raw material. I made some purchases in between raw material, and then closing, I had certain amount of raw material. If you do opening plus purchases minus closing, this will give you what? This will give you what? This will give you raw material consumed. Yes or no? Everybody with me? Opening raw material plus any purchases made during the year minus the closing raw material will give me what are the raw materials I have consumed in that particular year. What is the value? Calculate the value. 89,800. Okay. Only one person has given me that answer. Okay. Is it right? Okay. Okay. Correct. Now, we also have WIP, right? Let us also take that work in progress. Opening WIP. How much is the opening WIP? 9,500. Where will closing WIP come? Closing WIP. How much is the closing WIP? You have to go to the additional information. 7,800. Okay. So we have included opening WIP and closing WIP. We have also included opening raw material, closing raw material, and the purchases we have made during the year, right? Okay, what else we have? We'll go back to the trial balance. What else we have? We also have a sale of scrap. If you see, this sale of scrap also will be forming part of your manufacturing account, because this is an income that is coming out of the scrap that is sold as part of your manufacturing, right? Scrap is part of your manufacturing, so income from that also have to be shown in your manufacturing account, which is 2,500, right? This is also done. Now, any other direct expenses or indirect expenses, those have to be included. So what are the expenses that we have here? Okay, we can't take debtors, right? We finished till here. Finished goods will not come here. Debtors we can't take. Carriage on purchases. This is something which is an expense. Carriage on purchases. Nothing but the transportation charges, 1,500. What is the next item? Bills receivable will not come. Wages will come. Yes, wages will come. But I think wages has an adjustment, no? What is the total wages? 13. They told we have outstanding wages. What is the outstanding wages? Let us go to the. They told wages outstanding is 2,000, right? So I will include that as well. So this will be 15,000. Got it? Yes. Next one. Salaries you can't take. Telephone you can't take. Repairs to office furniture you can't take. Office furniture. Repairs to plant you have to take. Repairs to plant. How much is the value? 1,100. Something relating to plant have to be taken. Correct? Yes. What else? What else? Repairs to plant is done. Purchases are done. Plant and machinery will go to assets. Now rent. Rent and lighting, I think they gave you some breakup. So let us see that. Now for rent, what did they tell you? Office premises will occupy 1/4, which means out of rent, 3/4 can be taken up here. Correct? 6,000 into 3/4. Agreed, everyone? How much is the value? 4,500. Okay. Okay. And lightning also, they told you some breakup. Lightning 2/3 will be going to factory, correct? So lightning one three five zero into 2/3. How much? 900. Done. Now look at this point. They told machinery is depreciated by 10%, right? And office furniture by 7.25%, 7.5%. Now this machinery is relating to your factory. So the depreciation on this machinery or the plant will come here. Okay. Office furniture ka depreciation will go to your P&L statement. This breakup also you will have to do. Now, what is the plant and machinery value? Depreciation I'm writing here. 70,000 into 10%. How much is the value? 7,000. Okay. Now calculate the amount balancing figure. Calculate the balancing figure. Is it on debit side or credit side? Calculate that also. So how much is the value? 11,9,000. Is that correct? Did everyone get that? Okay. So what is this balance then? This is called cost of goods manufactured. Okay. So in this account, what did we take? We have taken the WIP, opening and closing WIP. And then we also have taken what are the raw materials consumed in that year and any other expenses, right? All these expenses, whatever you have taken, mostly here are expenses that relates to the plant or that relates to manufacturing only. Only such kind of expenditures we have taken, carriage, wages, repairs, rent, all these which are relating to the factory or which are relating to the manufacturing part are only taken up here in this account, correct? So this is called as a manufacturing account. This part we didn't do before, that is why I'm explaining it again to you. In manufacturing account, listen carefully, you will have to have opening WIP and closing WIP like you have your opening finished good and closing finished. And other than this, you will have to include raw materials consumed. How will you calculate raw materials consumed? Opening raw material plus purchase of raw materials during that year minus your closing raw material. That will give you how much is the raw materials consumed. Any depreciations you have on plant or any other wages, all these things relating to the manufacturing have to be taken up in this manufacturing account. So all expenses which are required for you to convert your raw materials into a finished product. Okay, raw materials have to be converted into a finished product. That is our aim. So whatever is the cost included in converting from raw material to finished good, all those have to be added here. So finally we came to a conclusion that this is the amount of cost that is involved for manufacturing my number of units. How many ever number of units I have manufactured. Now, you will start here the trading account with what? You will have to have opening stock of what? Finished goods. What is the opening stock of finished goods we have? I'll go back to the question. Finished goods opening stock is 15,500. Can you all see 15,500? Yes. Okay. Now, what is the closing stock of finished goods? It is given below. Finished goods closing stock is 18,100. 18,100. Okay, these two are clear. Opening stock of finished goods and closing stock of finished goods. Now, in between, generally when we were preparing trading account, what did we include? Purchases for the year, sales for the year, and we also have included any expenses, direct expenses, right? Now, we are not doing any trading here, right? So what are the cost that we have manufactured? That will come up here. Cost of manufacturing, whatever we have calculated from. So this here you will transfer to trading account. So this will come from manufacturing. This is the only difference. The balance over there will come here. How much it is? 11,900. Is this part clear? This is one main thing you will have to know. Here we are transferring to trading account. That will come as part of your expense because this is the cost of manufacturing goods or this is the cost of goods. I mean, whatever total manufacturing cost that you require. So you will have to take this. Okay. And any sales, if any, that is again common. Sales. Now I'm going back to the question. What are the sales we have? 167,200. So we have opening stock, closing stock, sales, purchases will not be there because we are not going to purchase any ready-made goods. We are only going to manufacture the goods. So ready-made goods are not purchased. Ready-made finished goods are not purchased. So mostly purchases will not come. Only the cost of manufacturing will come. This difference, if you understood, then it is clear, right? Purchase of raw materials will be there. Purchase of finished goods will not be there. This is okay. So now calculate whether it is a gross profit or gross loss. Quickly calculate. Gross profit, okay. 800. Okay. This should be transferred to P&L. Correct? I'm transferring this to P&L. Now we'll start doing the P&L statement. Let's go back to the question again. So all the opening stocks are done. These two are taken in manufacturing. Raw material and work in progress were taken in manufacturing. Finished goods were taken in trading account. That's done. Sundry debtors should come in your balance sheet. Carriage is done. Receivables will not take. Wages will not take. Salaries we have to take. So salaries. But salaries has an adjustment. Outstanding salaries. Correct? So how much is the value of salaries? 10,000. And what is the outstanding salaries amount? They gave it here. Here, in the additional point, salaries has an outstanding unpaid amount of 900. 900. So it is 10,900. Okay. Then, what else we have? Salaries are done. Telephone and postage. How much is telephone and postage? 1,000. Then we have repairs to office furniture. 350. Right. Next we have cash at bank, will not take it here. Office furniture we won't take. Repairs to plant was taken in manufacturing. Purchases are done. Plant and machinery in balance sheet. Rent and lighting, though, you have some half written there. Remaining half you will have to write it here, right? So you have rent, lighting. Rent, how much did we take in manufacturing account? I'm going back to the manufacturing account. We took 6,000 into 3/4. So 6,000 into 1/4 have to be taken here. 6,000 into 1/4. How much it is? 1,500. Okay. And lighting, how much did we take there in manufacturing account? We have taken 1,350 into 2/3. So 1,315 into 1/3 have to be taken here. Into 1/3. How much? 450. Okay. These two are done. And general expenses there. General expense of 1,500. And we should take depreciation also. Depreciation is how much? They told it is 7.5% on office furniture, right? How much is the office furniture? 10,000. So calculate the depreciation. 10,000 into 7.5%. How much is the depreciation? 750. Okay. This is also done. Rest all are taken up. Yeah. Creditors will come in balance sheet. Bills payable also balance sheet. Sale of scrap, we took it in manufacturing. Commission received. Yeah, this is there. So this should come on the credit side. Why? Because this is an income. Commission received is an income. So I'm taking it on side. Commission 450. Now provision for doubtful debts is there. Okay. Capital will not come. Sales are done. Bank overdraft will not come. So provision is something we will have to do. So for this, we will do a small account. Provision. Okay. Now, what is the balance you have? The balance in the account is 1650. What should be the balance carried down? They told provision is 1% on sales. Calculate the provision value. Calculate the provision. I want everyone to do this calculation, please. 1% on what? Sales. Sales value. I'm showing up the value if you want. Calculate the value. 1.67200 into 1%. Okay. 167. Any bad debts given? No bad debts. So this figure bad debts is nil. So what is the value that should go to P&L statement? What is the balancing figure? 22. Okay. Very small figure. Huh? Fine. So provision for Doubtful debts is 22. I think rest all we finished, no? Rest all we have taken up. I think calculate the net profit now. Calculate the net profit. 34775, is that right? 778. Okay. Done. I'm moving on to the balance sheet. Now, balance sheet, whatever items are left in the trial balance, it will almost go to your balance sheet, right? So let's do one by one. Now, first is capital account. Then you add net profit to it. And you remove drawings. What is the capital value? 1 lakh. And net profit, we just have calculated in the P&L statement 34778. Do we have any drawings given in the question? Do we have any drawings given in the question? No drawings. So what will be the value? 134,778. Okay, done. What is the next item? Debtors are there. Okay, taking debtors here. Debtors value is 24,000 minus provision for debts, doubtful debts. How much is the closing value of provision for doubtful debts? 1,670. Total figure, final figure. 2,232. Got it. Next item. Carriage will not take bills receivable. Okay. Bills receivable will come on the asset side. Bills receivable, how much? 15,000. I'm going in order how it is there in your trial balance so that it is easy and we don't skip anything. Okay. Wages will not come. Salaries are done. Telephone is done. Repairs is done. Cash at bank. Okay. Next is cash at bank. Cash at bank is 17,000. Next is office furniture. Okay. Furniture, I think we had some depreciation to it, no? Furniture is 10,000. What is the depreciation value of furniture? We wrote it somewhere. 750. Okay. 750. So final value is 9250. Okay. Then repairs to plant is done. Purchase certain plant and machinery. Okay. Plant and machinery is 70,000. And we had a depreciation of 7,000. So this will be 63,000. Correct? Plant and machinery is 63,000. Office furniture is 9250. Okay. Okay. Rent is done. Lightning and general expenses all are done. Right? I think we had some outstanding thing now for wages and salaries that we will have. Outstanding salaries and outstanding wages. How much is outstanding salaries? Outstanding salaries is 900. Outstanding wages is 2,000. Okay. Done. I'll go back again. So all these are done. Now I'm coming here. Sundry creditors is there. Creditors value is 15,000. Okay. And bills payable is also there. Bills payable 7,500. Yes, sale of scrap we took it in trading, commission we took it in P&L, provision we have removed here from debtors, capital is done, sales are done, bank overdraft. Bank overdraft 8,500. Okay. Anything else? Anything else that we had? We have to take closing stock, no? Closing stock may we had 3 different items, not just one. So we had raw materials, we had WIP, and we had finished goods. So we have to take all of them. Going back to the question. Yeah. So we have raw material 16,200. Then finished good is 18,100. Semi-finished goods is 7,800. Together, what is the closing stock? Total closing stock is how much? Calculate the total closing stock, all 3 together. 42,100. Okay. Now, tally the balance sheet. You have taken all the assets and liabilities. Tally the balance sheet and see if it is matching. Total is 168,678. Okay. 168,678. Got it. It's matching, right? So look at this question. This question had all 4 accounts: manufacturing, trading, P&L, and balance sheet. So the difference between this manufacturing and trading is what? In trading account, we didn't have any other expenses. It is only the cost of the manufacturing. That's it. How will the cost of goods manufactured come up? It will come up from your manufacturing account. So it should go in that order only. Correct? If the balance is transferred from manufacturing account to trading account to P&L account to your capital account. In that way only you can finish your account. Okay. Any questions in this manufacturing account? Yes, Arun.
Question is that they have spent amount towards repairs to plant, 1,100. Can't we
Can
add
we,
back?
no, can you repeat? I didn't get you.
The repairs to plant amounting to 1,100. Why it's not added to plant and machinery?
We have taken no in our
No,
manufacturing
considered,
account.
but we're not
Uh,
added. Considered as an
why is
expense.
it not added to the cost of
Added
the
to
asset? That
plant
is
and
what you're
machinery.
asking?
Yes, ma'am. Plant and machinery.
You can add any repairs or any other cost to the cost of the asset only if they are adding value to the asset. Okay, general repairs and all will be like an operating expenses which has to be taken to your trading, manufacturing, or P&L. It is an expense only. It can't be added to the cost of the asset unless and until it is a major expense. It is adding. See, if you are making a complete replacement of a part, then what will happen? That part is completely replaced. No, it will add value to your asset. In that case, such major expenses will be added. If these are like routine expenses which are generally done every year for maintenance purpose, such expenses will not be added.
Thank you, ma'am.
Okay.
Yes.
So there's one more question in this chapter, which is also the similar kind of a question. Opening WIP, closing WIP are given. Opening raw material and closing raw materials are given. There are few expenses also given. I want you all to try this question. This is a very simple question. You don't have to do all the 4 accounts. That's why I did that question and wanted you to do this one. But you just have to create a manufacturing account. Okay, try this question. Now, with this, we finished the final accounts wherein all 4 different accounts are involved. One is the manufacturing account, one is the trading account, and the other one is the P&L statement and balance sheet. Manufacturing account, trading account, and P&L statement are all income statements wherein they try to tell you what is the income, what is the expense, or what are the profits that you have. And the balance sheet is a position statement which will tell you what are the assets and liabilities that you have. Okay. Akshit, I'll take your question in the end after the class. Okay. Carriage purchases here, we have taken up the carriage purchases, whatever we have, are taken up in your manufacturing account. It is because these are relating to the purchases that we have done for the raw materials, and raw materials ka related carriage, all transportation, everything has to go to your manufacturing account only. It can't go to your P&L statement, or it can't go to your trading account. Trading account mein no more expenditures will come. Okay. Yes. So with this, we have concluded final accounts, wherein we have prepared manufacturing, trading, P&L, and the balance sheet with all different kinds of adjustments. Right. Now we will see one small chapter, which is incomplete records. For this, you just have to know few things. I have to start this incomplete records. So what is this incomplete records is? You all know what is a single entry system? What is a single entry system? Anyone? Single entry system? I want you all to answer. What is a single entry system? Don't know. Okay. One person says we don't know. Don't know. Okay. Most of you don't know. Fine. In single entry system, what happens is generally you will not maintain all the accounts like we have done. So generally, if there is a transaction, okay, let us take a transaction. Cash purchases. Now, in cash purchases, what will happen? You will have to debit something and credit something. What will you debit? What will you credit? What will you debit and what will you credit in a cash purchases account? Debit what? Credit what? In a cash purchase. Please reply in the chat box. Okay, I got the answer. Fine. So you know that debit will go to purchases and credit will go to cash. Why? Because cash is going out and you have made an expense by doing the purchases, so purchases is debited. Now this is the double entry system, correct? Double entry means what? For every transaction we feel that we are going to have effect for two transactions. One thing will come in and one thing will go out. In one transaction there is one balance that comes in and the other balance that will go out, or one expense is there, one asset will go out. Such kind of transactions happen in any business. That is why we have a double entry system. But in single entry system, what happens is you will not post all these debits, credits, or you will not post all these kinds of different accounts. Generally, in single entry system, you will either have some personal accounts, or you will have only cash account and personal account maintained, or some cash account and some other subsidiary books accounts maintained. That's it. Which means I'm only having a cash account. Okay, I'm only having a cash account. Then what I will do? Cash has gone out. So today I made a purchase, 20,000 has gone out. Tomorrow I made some sale. So some 1 lakh amount came in. So this is reduction, this is addition. Some amounts, 20,000 has come in. Then you made an expense of 30,000. So you just maintain this kind of a cash book wherein something that is coming in, something that is going out only is recorded. The other part of the adjustment is not recorded. That is what is called single entry system, wherein only one side of the entry is recorded. These accounts are mostly maintained by such persons wherein it is a small business, very small business, maintaining so many books and then consolidating them and then preparing the final accounts and then calculating what is the profit that you get out of it, calculating how much profit I got by the end of the year. That will become very difficult when it is a very small business, and also and also to calculate the profit, and also to see if there is a business, and you have to know whether such business doesn't have much transactions, very less kind of transactions. Such cases, single entry systems will be followed, right? Single entry systems are followed by such kind of a persons where you have very less transactions, or when you feel that The business cannot maintain so many transactions or cannot maintain all the books of accounts to record everything for calculating profit. Such kind of things we will have to maintain the single. Such kind of businesses maintain this single entry system. Okay. Yes. Tell me, Arjun. Okay. Right? So in the single entry system, like I told you, there will be three types. One will be pure single entry, the other one will be simple single entry and quasi single entry. Wherein pure means they only maintain personal accounts. Personal accounts are like, there is a person X account, person Y account, or person Z account. So such kind of personal accounts are. Simple single entry, they try cash book also. That is simple single entry. And in quasi single entry, like I told you, subsidiary accounts are also maintained, like purchase accounts, sales accounts, and few other accounts are also maintained. So what is your type of single entry depends on business to business, because not everybody will maintain all the accounts, right? But why are we learning this single entry system is because we are doing a chapter incomplete records. Incomplete records means what? We don't have complete information to prepare a final accounts. Our main job is what? To prepare the financial statements like the trading account, P&L, and the balance sheet. But to prepare this, you will have to need what? Trial balance. For trial balance, what do you need? The ledger account balances. For ledger accounts, what do you need? The journal entries. Only then you can prepare the financial statements. But what if the person is not maintaining books of accounts, or complete books of accounts are not prepared? He is only preparing a cash book. With only cash book can we prepare financial statements? It is not very easy. No? By using the cash book, can we completely show what is the picture of the profit and all that? It is not possible. So there are other techniques or general things that we use when people are maintaining single entry system, single entity system. In that case, we follow this incomplete records. When we have incomplete records, we try to follow few techniques to finish the financial statements, right? Like using the purchases and sales ledger, or using the cash book, or using the drawings that we had, or some other investments that are made by the sole proprietors or partners. He must have done some drawings, all that, using different kinds of informations. You try to pick information from all different accounts and then finish your financial statements. That is why it is called incomplete records. No, you don't have complete information. So with whatever information you have and some related accounts that you have, you try to pick balances from there and see how it works. Correct? Now, one such method is this net worth method. In this single entry system, when you're trying to have a single entry system, how the profit is calculated. You can't prepare a P&L statement. Then how will you do this profit calculation? This is the way we calculate the profit, wherein we try to see what is the opening capital, what is the closing capital. Opening capital means when you started, what did you start with? And when you're closing the business for that year, what is your closing capital? The difference is generally either drawings or any capital that is introduced, right? Either it should be there, or you will also have what? Profit. That is what we have studied before also, right? Capital, you add profit to it, you remove drawings from it, and you will get your closing capital. Same way, when you don't have the information about net profit, you will use other information and calculate what is the net profit for that business, right? So here we are using a reverse method, wherein one information is missing, you use other informations and calculate the net profit. That's it, right? So we'll see few questions. Yeah, look at this question, illustration 3. Now I'll tell you what a statement of affairs and the balance sheet can difference. Statement of affairs and balance sheet will have very small difference. Now when you say balance sheet, when you say balance sheet, we have all the liabilities and we have all the assets, correct? We just have to see whether the totals are matching. Because we have all the information, we just put all the numbers and then see if the totals are matching. But if you say statement of affairs, That means whatever information I told you, we have a lot of information missing. So with whatever information that you have, you put everything, and capital account, whatever you have, will be the balancing figure. The balancing figure in this statement of affairs is nothing but the capital account. That's the difference between a balance sheet and a statement of affairs. When you have some incomplete records or total information is not available with you, you prepare statement of affairs. The final balancing figure will be your capital account, right? Okay, now look at this question. In this question, we have some assets information and liabilities information given on two different dates. One is 31st March 2021 and 31st March 2022. So you have building, furniture, inventory, debtors, cash. But you don't have building and furniture ka value as on 31st March 2022. Can we calculate? Can we calculate, suppose you have opening opening balance. Can we calculate closing balance of any asset? How will you calculate? Some are saying yes, okay, but how will you calculate? How will you calculate? I have only these opening balances and closing balances, they put question marks. So can we calculate this? Yes, we can calculate. How? By reducing depreciation. Yes, you are right. So the opening and closing balances ka difference of any asset is nothing but depreciation. So if depreciation percentages are there with you, can we calculate the closing balance? Yes, we can do that. So these two numbers we can fill. Inventory, debtors, and cash, we have opening and closing balance. Good. Okay. What else we have? Cash also we have opening and closing balance. There are few liabilities. Mega, will you stop this, Mega? This is very serious. I'm going to take this very seriously, Mega. Please. Priya ma'am, are you there? Or technical team? See, this Mega, can you please remove Mega Verma? Because she's putting a lot of very, very no annoying comments in the chat box. I can't see all those. Please, remove her.
Okay, ma'am. Okay.
This is my request. So we have assets ka information given, opening and closing, and we also have liabilities ka information given, opening and closing balances. These two are missing, but we can even find out them if the percentages of the assets are given. So what is the information given to us? They have decided to depreciate building by 2.5% and furniture by 10%, which means can we finish these two figures? Yes, because depreciation percentages are there, you can finish those two. And what else is given? One life insurance policy of the proprietor was matured during the period and the amount of 40,000 is retained in the business, which means what, the sole proprietor, whoever is the owner of the business, he got some life insurance policy matured. He got some amount in his hands. So what did he do? He have reinvested in the same business. So he put that 40,000 as an additional capital. So this 40,000 is an additional capital that was brought into the business. Okay. Next, the proprietor took 2,000 per month for meeting family expenses. This is like a drawings that we have. 2,000 per month. So it will almost be 24,000 per year. Are they asking you to prepare balance sheet? Should we prepare balance sheet? Balance sheet is not required, right? Why? Because entire information is missing. We will have to prepare what? The statement of affairs, right? So statement of affairs have to be prepared. Let us do that. Right? Can you see my screen?
Yes, ma'am.
Capital and we have other liabilities also to be taken up, right? So what we have under capital, do we have capital balance? We don't have, we'll do that. Okay. Let us also take other things. We have liabilities, mail, loans, and sundry creditors. Directly picking the values from here, nothing like, new. Whatever values we have here only, I'm picking it up. 80,000 and 70,000. Now assets may we have building, which is 1 lakh. What will be the value of building as on 31st March 2022? Just calculate. Furniture also. Calculate these two values. $97,500. Did you remove depreciation correctly? Those who are giving the answer, please check again. 97,500. Okay. Furniture is 45. Okay. So this is after removing the depreciation. Fine. Okay. And what is inventory value? 1,20,000 and 2,70,000. 40,000 is the debtors and 90,000. And 70 and 85. Cash in hand is also there. 1,200 and 3,000. Did you all finish? Just give me a minute. Done. What is the balancing figure? Tell me year wise, because we have year wise. You're just putting the numbers, but I don't know year wise. Okay. One person has put, okay. 21 it is. 38, 1, 200. And is that total or you're telling me the balancing figure? Just tell me the balancing figure. I want the balancing figure because you have all the figures round. Whatever is the balancing figure will be your capital balance. 22 it is 440,700. Okay. Then this is 21 ka figure correct? 21 it is not correct. Okay. 21 it is how much? 241,200. Okay, okay. Got it. Done. Right. So these two are nothing but your balancing figures. Where did I get these figures from? I can't get these figures from anywhere. I told you also, statement of FIRs means after taking all the assets and liabilities, whatever balancing figure you have will be nothing but your capital account, because we don't have any capital account balance given. If you see this question also, they only gave you assets and liabilities. That is the incomplete records, right? We don't have the value of capital. That is why we are doing this statement of affairs. Now in the statement of affairs, the capital account balance will come up from where? From balancing your account. These 2 years we have taken the balancing figure as the capital account balance. Is this clear? Did you understand the difference between this one and the balance sheet? Balance sheet, till now we did so many questions, no, in final accounts. Did we ever take balancing figure as our capital balance? Did we ever take balancing figure as our capital balance in the questions that we have done till now? Till now we did final accounts with so many questions. We didn't take, no? Never we have taken the balancing figure. So that is the main difference between the statement of affairs and the balance sheet. Mostly in balance sheet, all the information will be available to you. You just have to check if the balance sheet is matching on both sides. But in statement of affairs, you can't see that it is matching. Whatever is the balancing figure will be your capital account. That's it. Okay. Now, in continuation to this question only, we have one more question. That's why I put this. They're asking you to take the figures from the same question and they're asking you to find out the profit. Can we do this calculation of finding out profit? We will need what for calculating profit? In capital account, I told you also this formula. If you remember, where is this? I told you this, right? How will you calculate profit? Closing capital minus opening capital, and if you have any other adjustments you can take this and calculate the profit. So we are going to apply that method now and then calculate. What is the closing and opening capital? We can take it from here. Opening capital and closing capital, tell me the values. We have already done. 241,200 is opening, closing is 440,700. Okay, 440,700. Now, what else will be coming up in your capital account? In your capital account, what else will be coming up? Either your opening or closing. If you have introduced any capital in the year, even that will come up. Or if you have withdrawn something, even that will come up. And any net profit that is added in the year. Only these 5 things should come up, right? Do we have any additional capital brought in during the year? Can you see this 40,000? It's the same question. It's a continuation question only. 40,000 they have introduced in the retained in the business means this is something which is additional capital that is brought in, right? So I will take that. Additional capital. How much is the additional capital? 40,000. Do we have drawings also? Yes, we have drawings also. They told that proprietor took 2,000 per month for meeting his family expenses. So this is a drawing, personal expenditure, right? So this will be how much? 24,000. Now what is the balancing figure? Calculate the balancing figure. Calculate the balancing figure. 183,500. Is that right? We got this from 2-3 persons. I'm assuming it is right. Okay, okay. Most of you gave that. Okay, good. Done. So in this question, what we have done is we have already calculated opening and closing capital by taking the balancing figure from the balance sheet. We have used those opening and closing capital. We have used additional capital and the drawings to calculate whatever is the net profit. Okay. So they asked for calculating what is the net profit. How will you find out the profit? Since we cannot prepare P&L statement, we are using the reverse method of using the capital account as a base, and we have done the net profit calculation. Clear? This is one such thing that we do in an incomplete record. When information is missing, most of the things we try to pick it as a balancing figure and start doing the other calculations. Okay. Fine. Now, few more things I have to discuss. I want you people to please respond in the chat box. Are these two accounts interlinked? Yes or no? Are these two accounts interlinked? Yes. Okay. Everybody is agreeing to it, right? Okay, great. Now, what are generally included in any purchases account? What are generally included in any purchases account? Cash purchases that you make, credit purchases that you make, everything is included. Yes or no? And what are included in creditors account? Opening balance, closing balance, and if you have any credit purchases, not the cash purchase, credit purchases, yes, that is included. If any payment is done to the supplier, even that is also included. Yes or no? These are major things that will be included in your creditors account, right? The opening, closing, and any purchases that you have done in the year, credit purchases, and any payments. Now, what are included in debtors account? Opening balance, closing balance, any sales that you have made during the year, that to credit sales only. Credit sales only. And if suppose you have received any payments from the supplier customers, even that will have to be taken. Or if suppose you have allowed discount, even that also can be taken. Yes or no? Discount allowed. And here discount received also will be taken up. These are the major things that will come up, right? And in sales account also, you will have cash sales and credit sales, correct? Now, in incomplete records, these will be forming the major base. Also the cash account. In cash account, all the receipts that you have and all the payments that you have, okay? These 5 accounts are like the major accounts we use for preparing the financial statements, right? Now, suppose that you don't have any information about the credit purchases, okay? But you have information about the cash purchases from the cash account, okay? Which means these two figures can be filled from one from this account, one from this account. And these two informations can be filled from one from this account, one from this account. Agreed? So likewise, you can finish your purchases and sales. Correct? Opening stock will be the closing stock of the last year that we can do. So when you're doing an incomplete records, mostly how do you fill the information is you try to, bridge the gap by using different interlinked accounts. So you only told me that these two accounts are interlinked. These two accounts are interlinked. Now I can say that cash sales is interlinked here. Cash purchase is also interlinked here. That is how you will finish your financial statements. When there are incomplete records, this is how you will have to use a different account and then fill the financial statements, right? We'll do one question of how this works so that you have an idea. Okay, look at this question. You have cash book given, some receipts are there and some payments are also there, and you also have some other information given below. Look at that once. So bank balance, opening bank balance is there, and what are the payments received from debtors, cash sales, capital brought during the year, this is additional capital, interest on investments, payments to your suppliers, salaries, general expenses, rents, the drawings, cash purchases, and in closing balance. This is like the cash book wherein you have both receipts and payments. Now you have some assets and liabilities. Opening and closing assets, debtors, creditors, machinery, furniture, inventory, investments. Okay, done. But what are they asking you? They're asking you to prepare the final accounts for the year after providing depreciation at 10% on machinery and furniture, and 800 against doubtful debts. Okay, so you will have to prepare all the final accounts using whatever information that is available to you. Now, yes. So for trading account, what do we need? For trading account, what do we need? Opening inventory, and closing inventory. This will just take some 10 minutes more. I want to finish this question. Please respond, keep responding. Now look at here. Do we have closing and opening inventory given? We have all of both the informations given, 3,900 and 5,700. Now we need purchases. This information is missing because purchases is an expense account which cannot be calculated using these assets and liabilities, or it is not there in your cash book also. This is something we have to calculate. Do we have sales information? Even this is also missing information which we will have to calculate, right? These two we will do. Once we know these two, then we can calculate what is the gross profit. Agreed, everyone? This is how you will have to finish your trading account, right? Now for calculating the purchases and the sales and purchases amounts, we will have to do few accounts that we are going to do here. I'm doing the opening balance sheet here. Now, what are the opening balances you have? What are the opening balances you have? Debtors 14,500. We have cash purchases and cash sales given in the question. I agree to it. But purchases will include both cash and credit, no? So we need credit purchases as well, right? That is why we are doing the adjustment. Good, your question is good. But then we need that, so we are doing all these adjustments. Now we have debtors. How much is the value of debtors? Now quickly write all the values, 14,500. Then cash, 2,800. I'm writing all the values. Machinery, 7,500. Then I have furniture, 1,200. Then I have investments, 5,000. Then inventory, 3,900. Here you have creditors. Now, where did I pick all these values from? I picked all these values from this table only. It is given 1st April 2021. So I prepared on 1st April 2021 the balance sheet, opening balance sheet. This is also called opening balance sheet. So I've taken all the opening values and I have created this balance sheet. Whatever is the balancing figure will be my capital account balance. What is the balancing figure? Calculate the balancing figure. 29,100. 29,100. Done. Now capital account has an opening balance of how much? 29,100. Then closing balance. Then you will have additional capital, drawings, and then you will have net profit. Now going back to the question, do we have drawings given in the? They told drawings 3,600. Can you see that? Drawings 3,600. Okay. And what is the additional capital that is brought in? They told capital brought in during the year is 6,000. So I'm taking this also. Now, if I know what is the net profit, I can calculate the balancing figure, right? So this is pending. If we finish net profit, we can finish this also. But for net profit, we will need what? Purchases and sales. So I'm going down. Now, sales account. Now, in sales account, what all will come? In sales account, what all will come? And credit purchases. Agreed? What is the cash purchases we have? Oh, sorry, I wrote purchases. Now, look at the cash book. What are the cash sales we have? 11,000. Right? Okay. If we know what is the credit sales, then we will know what are the total sales account balances. For knowing the credit sales, we will have to do debtors account, right? Now, that's how I told it is, interlinked. One after the other account, if you do only, you will know what is the final balance. Okay. So debtors may, what is the opening balance? 14,500. Opening balance. Then what is the closing balance? 17,600. What else will come in debtors account? We already discussed. What all will come in debtors account? Opening balance should be there. Closing balance should be there. Then whatever, credit sales that you have done, that will come up. And anything else that should come up in your debtors account? There's one more thing that should come up. What is that? Yes, receipt. Right? Whatever you have received from the customer. How much is this? Okay. Discount allowed. I think discount allowed we don't have, so I'm skipping that. What is a balancing figure? What is a balancing figure? Please calculate, no? Balancing figure. One 100. Is this clear, everyone? Debtors account. Opening balance was already there with us. Closing balance is also already there with us. And few customers have paid 48,000 in between. So I have taken all three of them. Whatever is the balancing figure is nothing but the credit sales that I have. So 51,100 is my credit sales. Agreed? This is clear. So what is the total sales now then? Total sales for the year is how much? It should go to trading account. How much should go to trading account? Cash sales and credit sales together will go to sales account. How much is the total? Sixty-two 100. Okay. So I'm writing this in trading account. 62 100. Okay, done. Now, same way we will do the purchases and creditors account also. Creditors balances, we will pick it from here. 5,800 is opening, 7,900 is closing. This is opening. This is closing. What else we have in between? What else we are going to have? If any payments are made to the customers, even that have to be included. So payment to creditors, 35,000. 35,000. So whatever is the balancing figure will be your credit purchases. Calculate the balancing figure. 37,100. Okay, done. Done. Okay. So in your purchases account, what all will come? Cash purchases should be one thing and credit purchases should be one thing. Credit purchases will come from the below account, which is 37,100, and cash purchases will come from your cash book. In your cash book, do you have cash purchases given? Yes, we have cash purchases of 12,000. This is 12,000. So how much will go to trading account? Total 49,100. Did everyone get this? 49,100. Now the purchases will be 49,100. Calculate the gross profit now. We have sales, we have purchases, We have closing inventory, we have opening inventory. Whatever is the balancing figure will be your gross profit. How much is the gross profit? 14,800. Okay, got it. Now this gross profit have to be transferred to P&L statement, 14,800, right? Now any other expenses you have will come up here. What are the expenses we have here? Salaries is one thing. Salaries is 6,500. And we have general expenses, which are 1,500. And we have rent and taxes also, which is 1,500. And what else we have? Any other expenses that are there? Look at your cash book and any other expenses that we have. Interest on investment. Yeah, interest on investment is an asset. So we are taking, I mean, asset in the sense it is an income. So I'll take it here on the credit side. Depreciation. Yes, we have to take depreciation. Depreciation. I think we have two assets for depreciation. One is machinery and furniture. Tell me the depreciation amounts. Which one is 750? Someone knows. 750 is machinery, okay? And furniture ka? 120, okay. Total? 870. Okay, done. Okay. So here they only told provide 10% depreciation. So we have done that. They also told 800 for provision for doubtful debt. So this also have to be taken. No? Doubtful debts, just 800. I think we almost covered all of them. So calculate net profit. Net profit is how much? 2,830. This is clear, everyone? We have picked the values from whatever balances we have only. We didn't have all the information available, but with whatever information that is available, we are doing the calculation. 2,830 is the net profit. Where will I take this? I will take it in my capital account, 2,830. Okay. So now what is the closing balance of my capital account? Balancing. That's how I'm going to get the capital balance. How much is the closing balance of capital account? Calculate the balancing figure. Three, 4,330. Fine. Now I'm moving to balance sheet. Capital will be 34,330. How did we get? We just have calculated. You can show that breakup, drawings, and then we had net profit, additional capital, all that you can show, and the closing balance is 34,330. Okay. Next item, we have creditors. How much is the sundry creditors? 7,900. Then you have machinery. Machinery was 7,500 minus depreciation is 750. Then you have furniture 1,200. Depreciation is 120. Correct? Then we have debtors. Then we have cash. Then we have inventory. How much is debtors? 17,600. Cash is how much? Cash in hand and cash at bank, two balances are there. So it should be 6,400 and 500. 6,900. Then we have inventory of how much? Inventory closing balance is 5,700. Anything else? Okay, debtors may we had provision, no? This also have to be adjusted. 17,600 minus 800. How much will be data's value collected? Yes. So we have taken machinery, we have taken furniture, inventories is done. Okay, investments is missing. Let us take investments. 5,000. We have taken investments, inventory, furniture, debtors, creditors. Okay. We have taken capital also. So I think it should match. Calculate if it is matching. Total. Total them and see if it is tallying. Okay. Total is 4230. 42230. Done. I want others also to respond. Is it tallying? This looks, huge. It's like interlinked accounts have to be done. But if you understand the logic, it will be easy, right? So one after the other, when some balance is missing, how can you get that balance? Sales is missing. How can you get it? You can get it from debtors account. Purchases is missing. You can get it from creditors account. You need capital account. You can get it from your opening balance sheet. So you have to think how you can get the balances. Cash though is given. So cash purchases and cash any expenses are already given to you. So using the information that is available to you, you're trying to create a final accounts. That's the only part in this chapter. Information will not be given to you readily, but using the information you will have to do. It is easy, yeah. Like you told, it is easy, but it is lengthy. Right, you are right. Any questions in this balance sheet we have done, no? I've taken the balances from here for balance sheet. The closing balances are given here. All the balances are given here for closing balances. So I've taken these balances. Right? So incomplete records is completely about incomplete records is completely about filling the final accounts or preparing the final accounts with the information that is missing, right? So other than that, everything is almost the same, but some information will be missing to you. You will have to fill in that information using different parts or different interlinked accounts and finish the final accounts. That's it. I want you all to try other questions. If possible, I will try to take up a session for you to finish these.
Yes, yes. Hi, ma'am.
Hi,
Yes, ma'am.
ma'am.
We'll be trying to incorporate the class. Maybe at the end of the session around 8th April, we'll be taking. But yes, students, please keep scheduling, checking the schedule for the class that we will be taking for final accounts as well as incomplete records. Making some questions, selected questions, good questions. We'll be completing, solving those questions. Also, students have seen, we have already seen that ma'am has already taken the class. Ma'am, you want to conclude it? You can finish up. Then I'll.
Yes, ma'am. I'm done. Like I
Yes,
almost covered in the incomplete records also. I covered
yes,
like
yes,
one major question which has all the adjustments.
yes.
So, but if they feel like we need to do few other questions
Yes,
also, we
yes,
can
we'll
do
be
it in
taking
the
one more class. That is around 8th or so. So
yeah,
8th
sure.
April or so, we'll be scheduling there. Another thing, students, since she has already concluded the class, this incomplete records and final accounts, you have seen there are many adjustments which are common. For example, bad dates adjustment, data's adjustments, which you have already read in chapter 7, that is final accounts, and then you are using here also. I tell you, students, examiner has very favorite questions for asking for the calculate total debtor and total creditor account. So this incomplete record in itself is a very significant and important chapter. One, is it important because it helps you out to clear your basics. Your double entry concept is clear if you are very through with this. And second is a very easy chapter and a scoring chapter. Why is it easy and scoring? Because you will see the number of adjustment is less as compared to the number of adjustment there in the final accounts. Right, there are very few adjustments, but yes, you have to solve those adjustment. It takes a little considerable time. Am I right, ma'am? The
Yes,
thing
ma'am.
which is required
Time
here is
taking. It's a
it
little
takes
lengthy,
little
but yeah, it is
time,
easy.
but yes, it is always scoring. Incomplete records are always scoring.
Yes.
So
I
I
think
would
if they
request,
do the practice of these questions, it
yes,
will become more faster also. That's
yes,
main.
yes. Because the adjustment are usually very easy in this chapter. Now, I would recommend you please practice all the practical questions, practical knowledge, test your knowledge questions. One, second thing which is important is try all the illustrations they are given in the study material. Again, with your own hand. Only this is the only way where you can increase your practice. We may get a 5-mark question from the incomplete report, or we may get a full-fledged 10 to 12-mark question from the incomplete report. Any option is available. So you cannot say, you cannot think that the smaller question is not important or the bigger question is not important. In the same manner, in the final accounts also, we may get a question asking only to prepare a manufacturing account, or sometimes we get to prepare all the accounts, including the trading, profit and loss, and balance sheet. So students, I would request you to practice these chapters. These are very easy, since if the students are from commerce background, you have already gone through these chapters in your class 11th and 12th. So this is comparatively and consistently easy for you. You may practice well, you will be able to solve this question. I always recommend my children not to leave this question. This should be the last priority for the final accounts as well as for incomplete record. Whenever you're solving the paper, try to solve this paper at the initial stage itself, because at that point of time you are very fresh and you'll be able to tally the balance sheet in a very fresh mind. So it is always recommended to start or in the middle of the question paper. You do not leave it for last, because this is scoring as well as easier also for you. So I hope the concepts, our ma'am has already taken the concepts and everything very nicely, very clearly, and I think the things have been clear. In case if you feel still there is a problem, you can go to the recorded version of the classes, repeat, listen to the class on the repeat mode, and if you still feel there is some problem, you can always come to us and ask your queries under the Ask Your Queries BOS mobile app option. Ma'am will be uploading the assignment also in due course, maybe by today itself. Please solve the questions on a regular basis. Please practice these questions. Only practice can help you out to secure very good marks and take lesser time for these questions, especially for this incomplete records and the final accounts records. Right, ma'am?
Yes, ma'am. Thank
Yeah,
you.
yeah. Another thing, I would really request everyone to please also tell your friends to come and join these classes. We have been doing these classes. We want all to should take advantage of these classes, and also please fill the feedback form as well. We already have the feedback form. It'll help us to grow more, to bring more classes for you. And don't worry about that. You'll be having one practical class for this chapter specifically.
Yeah.
We'll be starting on Sunday. We are having the chapter not for profit organization. Kindly come for the class, do attend the class, and do practice. Thank you so much. Thank you, ma'am, for the
Thank you,
patient
ma'am.
listening. Thank
Thank
you.
you.
Yeah,
Thank you, ma'am.
thank you. Anji,
Yeah.
Anji.